Welcome to Lodging on Demand. In this episode, Lodging Editor-in-Chief Dennis Nessler caught up with Kerry Ranson, CEO of HP Hotels, to discuss the company's recent performance, outlook for the future, and a host of other industry-related issues. Ranson also reveals some growth opportunities for third-party management, including a potentially significant transaction in the coming months.
Hi, this is Dennis Nessler, Editor-in-Chief of Lodging Magazine. I'm here with Kerry Ranson, CEO of HP Hotels. Welcome, Kerry.
Thanks, Dennis. Appreciate it. Thanks for having me on, and good way to start the year.
Yeah, it's our pleasure. Kerry, tell us a little bit about HP Hotels and what kind of year 22 was for you, and how things are looking heading into 23.
22 was probably same for most. I think started a bit volatile, and then I think we eased in from a property perspective to some great performance numbers, struggles from a labor perspective, but also a time for us to kind of reposition and reset as you prepare to kind of come out of this thing, stabilize through it. And so for us on the property level, a really strong year, almost 70% of our assets, achieving, budgeted profit lines. I think which all points to some great things. We're, I think over 75% on achieving our revenue budgeted lines for our assets. Probably had some challenges as far as a roller coaster ride, as far as our portfolio with just sales that occurred during the year. And then also made some new relationships, I think, of what we're seeing in the market, and picking up some opportunities from that standpoint. But overall, I think I've said it for the last probably 2 years. I think our motto had been, through this thing, kind of staying alive, and through it, you've done it, and then also kind of positioned and reset to kind of take on that next step of where we are in the industry, and trying to also prepare ourselves. So what's that look like? How do we enhance our position from our learnings, from what we've done in the 20 years of being in business? And so that's kind of where the year's been. We, had the opportunity of making some adjustments with personnel too. And I think, it's some of it, potentially a risk, but also trying to get us ready as we come out of this, to make sure from a human capital standpoint, we're prepared, we can handle both the ups and the downs that had existed, as well as what probably still exists out there. So some good things, but overall great. Look, as our 20th year in business, I don't know if Mike and Joe and I would have probably said that when we started in 2002, right. But man, it's been a great ride, and it was a great year for us, and looking forward to what the future presents for us, for sure.
That sounds good. Yeah, you mentioned kind of resetting after the last couple of years. Do you think COVID's behind us completely?
I think we'll have some probably blips here and there. I think that's what I probably look at in 23, and seeing as we look at some of our pacing that's happening, that you'll probably have some great months that you look at and traditionally have said, oh, that was traditionally a softer month, where we look at it and turn around going, oh my God, we're so much stronger than we thought. And then the following month may be a complete drop off, because I think you're going to see some of that transient leisure maybe slow up weekends, but I think you'll pick up on the group side during the week. And so probably not a consistent run throughout the year. I think we need to be prepared in the fact that, and you're seeing it right now throughout the media, where again, the potential of a flare up of these things are concerned. How much does that concern and scare off travelers? And then the other piece is, what's happening with the inflation component, and some of the things that we're starting to get some momentum in the last 3 months, really strong momentum. Does that start tailing off as companies get concerned on what that looks like? Our numbers right now don't tell me that, but every prognosticator we talk to says differently. Right. So, our numbers don't lie, and to that I'll stick to. But I do think, we've got some more roller coaster rides in front of us with the ups and downs, and I think it'll be a little bit before we kind of get to some steady flying.
Yeah. When you talk about activating properties, what does that mean to HP? What are some of the ways you guys look to activate properties from a management perspective?
I think we can't. I think the lifestyle side of things is, not open. Like, not that we didn't know, but I don't think in the past. I think you looked at opportunities that were revenue generating avenues in these lifestyle assets. Whether it was retail, whether it was opportunities thinking outside the box with utilization of spaces. We never really took that probably into the select and the select full or select with F&B component. And those are the pieces where our experience with lifestyles, I think, helping us interact some of those spaces as well, and taking ideas like, working with local wine and liquor distributors to do tastings and things like that, even down to our Hilton Garden Inn worlds, our Marriott Courtyards, that are different ways of really bringing to life and experience in even those type assets, but also opening up revenue streams that we never really probably contemplated previously, just thinking, hey, our consumer is our consumer. We're going to capture what's there from the standpoint of breakfast or dinner. But it's opened up some opportunities for us to use meeting space differently, our public space, even our outdoor space a bit differently. And some of our renovations that we're doing, we're taking situations where, hey, maybe a pool isn't fit to our segments the way it previously was. Let's block in the pool and maybe add potentially a bar that services outdoors, to where we're taking what was maybe just a bland lobby area and then expanding it to the outdoor area. And then when we do things on the weekends, which would be Smurf type business, then we're opening up ourselves to have that opportunity to exercise selling our bar and our food a bit later than we probably traditionally had, or potentially even just closed it down because you figured, these parents and whatnot of the kids may not have wanted your food and they were bringing in their own liquor. Whereas this opens up some things. And I think our lifestyle has helped us kind of open our eyes through the pandemic to go, what are we doing? We've got opportunities in different avenues to drive revenue. And I think every square foot of it is going to need to be enhanced for us to kind of manage that middle of the page as these expense creeps continue, whether it's from the franchise side, which are going to just, I think, be exasperated in the next couple of years. They're ready to get back to, full tilt on, standards, adding new standards.
Right.
And then obviously the labor piece. The labor piece is, such a draw currently that is, from an expense perspective, really changing bottom lines. And for that, we've got to find ways to kind of manage and drive some additional revenue.
Right. Kerry, as you look forward to growth opportunities, strategic partnerships, what are some of the ways that HP is looking to grow? And is there anything kind of imminent in the next few weeks or months?
Yeah, so hopefully we'll have some big news here in the next probably 2 months that we'll be able to kind of share publicly with everyone. But we think that there's a big opportunity currently right now with companies similar to our size, or groups that perhaps were traditionally owner operators that through the pandemic are fatigued by it, but also have made avenues on their side of raising funds and things, but they've only managed for themselves. And so when you start raising funds and you're managing for other people, that's a different world. And that is a world that we've lived in since we started the company. I mean, we are at our core a third-party management company, and there is the ability and I think an opportunity out there right now with groups of similar type size to us and to other owner operators to kind of merge opportunities to be able to say, hey, we can expand the third-party side for you. You continue to do and work on the development side and raising funds to go and acquire, because we see that obviously as an opportunity absolutely in probably the next 12 to 18 months. And so with that, we've really focused ourselves this year on doing it. I've got no interest in selling out. I've got a long runway in front of me. And so for that, I want to be able to also find a way for our team that's been with us for years to also have potentially an equity sharing role with us as we move forward. And to do that, I don't want us to just go and sell to some of the big boys that are out there fishing for those type of opportunities. We looked at it and said, look, where can you find potentially similar minded, still long runway in them as well? Younger, potentially second, third generation owner operators that are wanting to expand their portfolios, and how do you come together? And so that's what we've been focusing on. Hopefully, we're in the midst of a relationship currently that, I think we're pretty far down the road. And I think if we can get this thing finished, we'll have some news probably by end of first quarter to be able to share with everybody. And that's really been a focus of us. I think there's huge opportunity out there for us at this point.
Yeah, we look forward to hearing about that. So you guys are currently at about roughly 25 properties, is that correct?
Yeah, I think 27, I think
Okay.
is the number right now. And then we've got another 2 that are coming on in January. So we'll be right back at that 30 number here pretty soon.
Yeah, and so I mean, you mentioned some of the other larger operators. What changes have you seen in the management company ranks over the last several years? We know scale is kind of an important criteria now.
Yeah, look, I think that's the biggest piece is you're seeing some of the, I think some of your acquisitions that have occurred have, really been to build themselves bigger. And I think, it's funny because you'll see some of the marketing components that happen there where they're talking about the ability to be focused on perhaps lifestyle, or they open up a lifestyle brand of their management company, or they're focused on select service. And for us, it's funny to watch that because for years we've always believed in kind of managing with feet on the ground. And you're seeing a bit of that now where these larger groups are taking claim to, hey, we're also managing with feet on the ground because we're in so many different markets.
Right.
But at that point, look, you're still a number. And I think you've seen it to where they're paying for management agreements. While to me, I think there's a philosophical challenge there. I think long term for what the value of your asset potentially is, it is what's happening, and it's tough to compete in that world. And I think for us, we've kind of tried to stay true to where we are, staying in our lane, recognizing, if we were potentially to be given an opportunity for a one-off that's under 400 rooms in a particular market where we're not within 3 hours drive of that market, we're happy to discuss it and try and start a relationship, but it's not an asset that we're more than likely going to retain under kind of our umbrella.
Mhm.
So even down to what we were talking about a few seconds ago, and our activity and potential merger opportunities, even that is with a group that's in kind of in our region and in our area that we feel like we can expand with where our offices are, touch things that they're on, and then potentially even probably move further with multiple assets in other markets to drive kind of our platform where we're putting actual feet on the ground in these particular markets versus a one-off somewhere. And so, I think that's, Dennis, I think that's kind of really what you've been seeing. And I think you've seen a fatigue out there on some of the smaller operators to where, how do you stay going when in this particular environment, assets have been trading surprisingly at historical high levels? Is that now going to settle down, and with it becomes this complete peak and valley? And how do you continue to support the owners and the assets that you're managing when you're up and down like that?
Right.
And there's been some changes that we've had to do internally as well to just sustain that, to where we've built relationships where whether it's with revenue management companies that specialize in AI and BI, that we can utilize their services and partnering together in kind of a co-op relationship where I don't need the overhead. They're experts at those particular things and delivering content and quantitative data that, hey, for us would have been a challenge at the numbers we were at. And so we've built some relationships with that in the market. and as well as from an accounting perspective and even offboarding some of our day-to-day data entry and things like that we may have done above property on our side. We've offshored that with some groups that we're working with and in our accounting firm that we work with and picking up some of those pieces for us to where I can go and add 5 hotels without any problems. And if we have to lose, then I'm not losing human capital that supports these assets day in and day out either.
Right. Absolutely. That's great. Kerry, I'd like to just talk a little bit about a few industry issues, just kind of a little lightning round here. Give me your first thoughts that come to your mind when I say a few of these. So we'll start supply chain.
Concern.
Very, very valid.
Concern.
Okay.
Middle of page headaches.
Yeah, right. How about inflation?
Real. However, I do think I think that's going to really probably affect us more so on the transient and leisure travel. I think don't kid yourself if a lot of these major companies and whatnot that are out there have built for the last several years kind of hey, we're going to have to manufacture and distribute here in the States. And so for us in the US, I think from a business perspective, our road warriors more than likely are going to be back out there because they're going to have to get rid of and distribute product that's been being manufactured. And so, I think it's real, but I think its effects will be felt differently for us from the hotel perspective. So I think a mixed bag is what I would say.
Yeah. International travel.
International travel, slow.
Coming back?
I don't see it anytime soon. I just think that some of this stuff that's still out there and lingering will be concerns. I think I think you saw some pent up. I think you'll probably see some European travel before you see the Asian side kind of open itself back up. And so I think the one word I'd probably use is slow.
Okay. Technology.
Our biggest opportunity has been, we've been behind so many different industries over the years, and we better wake up and recognize it and accept it with open arms, but finding a way to manage it without it killing what we do. And that's, people, and that's what our industry is. And so how do you make it work for you to where you're still, delivering, I think, an experience that the consumer wants for an asset, but making sure that, hey, is it making us efficient, and open your arms to it and recognize, and you better find a way to interject it into your day-to-day operations.
Yeah, great. Kerry, I appreciate your time. That's all I got for you. And I'm sure I'll see you out there at Alice and some of the other industry events.
Man, it's good to see your face. I appreciate it, and Happy New Year. And hopefully everybody's got a great 23 in front of us.
Yeah, amen to that. Thanks, Kerry.
Thanks, buddy. Appreciate it.
Thank you for listening to Lodging on Demand. If you want more content like this, subscribe to Lodging Magazine on YouTube. You can also subscribe to Lodging on Demand wherever you get your podcasts. For news and updates, follow @Lodging Magazine on Twitter, Facebook, Instagram, or LinkedIn, or visit us at lodgingmagazine.com.